All right, folks, back to work. Hope you guys had a fantastic day out there. CPI coming out tomorrow morning, bright and early. And wow, there are traps everywhere on these charts right now. We're still overall bullish, for example, on the hourly chart right now. But the tick charts, drill down to some tick charts right now, and the bears have a ton of momentum. And there's one very small clue on the tick charts that tell us the buyers have a very difficult road ahead of them tomorrow morning. So I've got some selling opportunities with some bull traps tomorrow. I got some buy setups I'm watching with some bear traps. Traps are everywhere. And as always, I'm going to give you guys an easy roadmap to make some money on bull traps, bear traps, everything in between. We'll give you an easy roadmap to make some money tomorrow as well in tonight's video. So enough of the intro. We've got a lot to talk about in tonight's video. Let's jump right in. Get these charts ready to go and make some money on CPI Wednesday. Oh, you know, the S&P and SPY is all ready to go here. Nasdaq, triple Qs, we're all ready. I have 4 very important clues on the charts right now that are telling us where I think the winning trades are waiting for tomorrow. One clue is right here on these hourly charts. It's very easy to see right now. We're still bullish overall. We get a nice healthy pullback right now, but we're still bullish overall. Until we can get this thing really separating off that moving average, we're still bullish overall right now on the hourly time frame. Now remember, I like to use the hourly chart as an overall directional filter. So buyers are still in control. That's the first clue. But you're going to see in a moment, we'll drill down to some faster time frames. The tick charts do not look very bullish right now. We're going to grab that. I have 3 more important clues here. We'll grab here in a moment. Before we do that, though, let's check schedule for tomorrow. You probably know this already, but if you don't, we have what could be the biggest news of the month of December, the CPI report. We know we've got a Fed announcement, FOMC announcement coming out next Wednesday afternoon. Will they be able to keep cutting rates? That CPI report will tell us tomorrow morning. I'm not going to speculate about if it's above or below. We'll trade the reaction tomorrow morning in our trade room, but be aware that will be a major market moving event tomorrow morning at 8:30 Eastern time. Also be aware too, I mentioned this in last night's video. This is the final week of 2024 for our SOT video newsletters. So make the most of these this week. We'll come back that first full week in January. So we'll take a break here into the end of the year. So make the most of these here this week. Now back to our charts though, because we know the money is made on the charts. Let's dive in though, because I told you earlier, there are 4 clues overall. One big clue, of course, here is the bullish overall market on the hourly time when we finally pulled back to that prior all-time high we talked about in last night's video. But let's drill down to some tick charts right now, because the tick charts are, ooh boy, these are concerning if you are a buyer right now. By the way, 7,000 tick chart, upper left-hand corner. If in case you're tuning in for the first time right now, all the time frames, upper left-hand corner. And that, my friends, is the 21 EMA. It is the only indicator I use to find lots of winning trades each week. I have 3 more important clues here on the tick charts. One big clue is that strong run down. Look at that separation off the moving average. Now, why is that important? Well, because anytime we see a strong move down, we expect to see a 2-legged pullback and a retest of that low before we get that bounce, that double bottom bounce off of that low. That's one big clue here on the tick charts. Another big clue here is going to be that range breakout, right? We had that bear move down into that range. Now, why is that important? Well, first of all, anytime we see a range breakout pullbacks are very, very common. Keeping an eye on the underbelly of that range. That's our second clue here on the tick charts. But the third clue might just be the dagger in the heart for these buyers tomorrow. It's this teeny tiny range. Now, why is that important? Well, because ranges act like magnets. So that range kind of anchors this market lower right now. More importantly though, ranges love to rotate. If you look back at that range earlier today, right? The amount above, the amount below, ranges love to rotate off the high in that case of that range. Ranges, this range down here is going to want to rotate back and forth. So I mentioned earlier, there are a lot of traps on our radar for tomorrow. Definitely have some bull traps up around the underbelly of that prior range, some bear traps down below the low. And we know tomorrow is CPI day tomorrow, so we're going to cover some variations of this just in case things get crazy tomorrow post that CPI report. I have 4 trades I want to talk about here on the S&P and SPY. Later on in this video, though, we're going to cover some different trades in the Nasdaq. So if you like making money, I would definitely recommend you stick around all the way to the end. First trade here on the S&P and SPY. As we go higher, I love the idea of that breakout pullback. I love the idea of shorting this thing back down to retest the low. The problem, of course, is we're an overall bullish market. I'm not going to try to pick that top on this. What I'd love to do is grab one of those failure into trap combinations I teach in our free video classes. So as we go higher here, this is not a great place to be a buyer, which means a great place to trap in some buyers. I'm going to use what I call a failure pattern here. Trap the buyers once, trap the buyers twice. Why twice? Because now I know where your stops are. If you're caught long in that situation, you get stopped out. You're selling your way out of that long position. I call these failure patterns in our free video class. Now, where's the market want to go at that point? It wants to go back to retest the low, but again, it wants to rotate the amount above, the amount below down there. If you want to make more money, add to your winners. The way you add, at least the way I add to my winners is I add with a bull trap pattern. Now, bull traps are very, very specific entry patterns, right? Watch how I draw this right now. There'll be a lower low in price, and we'll go right above that high. I call these failure into trap combinations. Now, once we complete that rotation, once we get that rotation down lower tomorrow, I would love to buy right off of that low. We're going to cover that trade, though. That's a bit of a tricky trade because it's so bearish in that scenario. We'll talk about that a bit later on in this video. But trade number one here of 4 trades I'm watching right now is definitely that failure into trap combination as we run back down and finish off that rotation. Now, let's face it, sometimes we don't get that entry pattern. Sometimes we don't go up 1, 2, and sell back down again. Sometimes we get up here and there's so many bears up here, it gets whacked right back down again. If we see a V top off this high, it almost always, V tops are tough because you never get a good entry signal up there. And so what happens a lot of times is it begins to grind going lower. That grinder is a really easy giveaway because now what I can do is draw a trend line off those lows. I can make a channel up around that high, and I can look left now, find some of these prior swing highs. And my favorite trade is always that first test off the high of that channel. I call these a first test trap, right? It's a trap because a technical trap pattern is right up on a prior swing. It's the first touch of that new channel. A first test trap in our trade room, we call these V-top reversals. If I don't get the chance to trap those bulls in and it rolls back over, whatever I do, I don't want to chase this thing lower. I want to sell as high as I can, and I'll do that with that V-top, that first test trap. Now, what if I'm wrong about this? What if I'm wrong? And again, later in the video tonight, I'm going to talk about how to buy that sucker back up again. We'll talk about some scenarios for some bear traps down there. What if I'm wrong though? I mean, come on, right? Making predictions is always tough ahead of CPI. What if we blast going higher? I mean, after all, we're still overall bullish, at least for now, on the hourly chart. So first things first is, if we wind up getting up here and blasting going higher, what's the problem now? The problem is first of all, I'm not going to sell into a big blast like that, right? Because at that point, momentum has shifted now for the buyers. So momentum's fine. The problem though is now I'm way too high, right? I'm way too high up now. So what is the solution for a move that goes too far like that? It's always a two-legged pullback. So if I'm wrong about this and we really squeeze going higher, obviously anything can happen around the CPI report. I'll then begin to look for a one-leg, two-leg. Think about a measured move. These are called two-legged pullbacks, all right? Two-legged pullbacks. As we start pulling back, wait for those 2 legs. What I'll do in these cases too, by the way, is I'll look left, find a way to draw a new channel. I'll look for these prior swings up here, right? Find a new channel like that, mark it off that low. My goal in these cases is to combine that two-legged pullback, 1, 2, think about a measured move, right? Measured move, A, B, C, D, get down into that area. Now, you know me, right? I'm not going to pick a bottom on this. What I'll do is I'm going to use that same, remember that failure into trap combination. In this case now, it's a seller failure. Bears try once, bears try twice, trap those bears in, squeeze those stops. Again, with all of that momentum in this scenario now where's the market want to go? Remember, anytime we see a strong move in one direction, we know the market wants to go back and take out that high. So it becomes a seller failure pattern. Bears once, bears twice, squeeze those stops going higher. And then how do we add to our winners? We always add to our winners with those bear traps, right? In this case, a bear trap, it's a higher high in price and an entry right below that low. Now, I've got one more reversal style trade here I want to talk about to finish off the S&P and SPY. Before we do that though, let's slow down for just a moment though, because I know most of you folks watching right now, you know these patterns already. You're making money with failures, traps. You know we love these so much. But if you're here for the first time right now, this might be a brand new language for you, a brand new strategy you want to learn. Don't you worry. I teach the entire system in a free video course. In fact, I have like 100+ examples of failures, traps, two-legged pullbacks. You'll love our free video classes. I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course, because the strategy I teach in that video course will teach you a simple trick we use in our members trade room that tells exactly where the winning trades are going to be each day. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, start making a lot more money. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries each day, if you've lost your confidence in your current trading strategy, hit that link that popped up there. Take that free video trading course. Everyone loves all the trade examples I share in that short video series. The best part is it's 100% free for you. Also too, I'm going to put all the important links in case you can't get the little pop-up there. I'm going to put all the important links you'll need in the description of the YouTube video. Definitely start first on the free video course. Everyone loves that free video series. Most folks start making money on their own with that free video course. So start there first. Also, don't forget too, the place to be every day is in our trade room. We trade together every morning, 8 o'clock Eastern time. I'll put trade room information down there for you. And if you're on Twitter or X, I post a ton of charts and videos and mindset stuff on Twitter X throughout the day. If you're on Twitter X, give me a follow. You'll love that feed. Again, all the details you'll need to learn more, hopefully earn a lot more, will be linked up in the description of tonight's video. So where did we leave off? Now that you know where to learn more about the entry tactics I'm talking about in tonight's video, I talked about if we wind up going up, right? Two-legged pullback, buying nice and low, right? Not chasing after it and buying high. Okay, one more variation of that. And then I want to talk about if we go lower, because the real money tomorrow might be that move going lower here for us. If we start popping up, oftentimes, again, remember this, we're overall bullish on the hourly chart, right? Very important to keep that in mind. Oftentimes, when markets start to squeeze going higher, they begin to pop up and separate and grind going higher. Remember, grinding markets are an easy giveaway. So if we pop up and we can start grinding higher. Now again, if we pop up and we start seeing buyers once, twice, okay, now that's a short, right? Going back down to retest the low and possibly a pendulum swing going lower here. But if we really pop up and we start grinding, separating higher highs in price right off of that 21 EMA, I mentioned this one earlier in this video tonight, but in case you missed it earlier, now we'll do is we're gonna mark off the high, we're gonna bring it down off that low, and what do? First test is the best test. I talked about this in a V-top right earlier on in the video. Same idea here. The hardest part about these is don't chase after it. That's always the hardest part about this, because that voice in your head will be screaming at you, get in, you're missing it. Your patience is usually rewarded on these types of trades. Mark those lows. What I want is really any of the entry patterns I teach in the free video course. It could be a bear trap. Like I'm showing you here, oftentimes we'll get below that 21 EMA. The bears come in, they try selling short. Again, once we get that grinder move going higher, now we're anchored up around those highs now, trap those bears in the failure pattern. And again, you want to make more money, add to your winners with in this case, it's going to be a bear trap. Remember, those trap patterns, you want to get that separation off the moving average, higher high in price, a ton of examples of those inside of the free view course. Now, one really cool thing about these pop and grind moves like this is the size of that pop leg is a measuring leg. Right? So once we know how big the pop leg is, and this will be pretty obvious, it'll really pop up, spike up, and start grinding higher. The size that's that pop up leg, right? Maybe a bit bigger than what I've got you showing right now in this video right now. But the size of that pop leg, I can now bring it down to that low and project higher, and that will give me my target on that move going higher, right? So buy the pop and grind on that. You can easily go back and rewind the video and review these scenarios. So as we go up, we're bull trapping in, right? Bull traps off the high, back down again. If I'm wrong and it really pops up, it's a two-legged pullback, buy nice and low, right? Or it's a pop-up, grind, find that channel, don't miss that first test is the best test. And obviously, I'm just simply drawing the screen right now. We'll do it all together tomorrow in our trade room and have a ton of examples of these inside the free view course. But now let's get serious though, because again, this range, now who knows, right? Tomorrow's CPI report tomorrow morning. Anything's possible. But you take away the CPI report and these situations, it's almost a guarantee we go up and roll back down again. So how do we buy it down here? How do we sell it down here, right? So what's the game plan going lower here? Let's grab some Nasdaq. Nasdaq's getting lonely. I can hear him complaining over here right now. Now, Nasdaq, you'll notice we mentioned this last in the video. We may have to go a little bit lower here to get that prior all-time high taken out. If you watched last night's video, we talked about this, how there's a bit of divergence there between the S&P and the Nasdaq. And I think you'll see in a moment here in the tick charts here right now, that prior all-time high might be a gimme for these bears here tomorrow. Now, before we dive into the Nasdaq though, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading buddies, because YouTube rewards me every time you like and subscribe. I know we're all so busy people. It's holiday season. I get it. I appreciate you though, spending a few minutes with me every evening on these videos. So thank you so much for the likes, subscribes, sharing it, right? All the ongoing support. Now, let's get back talking about Nasdaq and making money for tomorrow. Tick charts. Where are the tick charts here? Remember, tick charts are based on volume. They make pattern recognition so much easier. So on a 4,000 tick chart here on the Nasdaq or the triple Qs here right now, quite a few more clues here, or quite a few of the same clues here on the Nasdaq, right? First big clue, strong move down. We talked about this one last night, right? Strong run down. What do we say? Strong run, retest the low. Sure enough, that's what happened. Strong run down, right? Strong run down, retest that low. We know it's a big bullseye at that low. Range breakout, we break out, breakout, pullback, back to that low. If there's one thing you learn from me, I hope it is ranges, because ranges took me so long to learn. They're complicated, but once you learn how they work, once you learn how rotation works, once you learn how breakout pullbacks work, if you're anything like me, I love range bound markets because they're so easy to trade once you learn them. And again, as I mentioned earlier, what might be the biggest clue here, it's a small clue, but a very big clue, is that tiny range there. Not as obvious on the Nasdaq as it was on the S&P, but the reason why that is very important right now is because that range is a magnet, right? It anchors this market going lower, right? Also, too, whenever we go up, right? We go up, back down again, the amount above, the amount below, all right? So same basic clues here on the Nasdaq. I would say one other clue here on the Nasdaq is you'll notice that big channel coming down. On the S&P, that channel's a lot steeper. On the Nasdaq, it's a bit higher up. So on the Nasdaq, a pop up, 1, 2, it's that same 2 try failure. Again, we're overall bullish. I don't want to go too crazy here, getting aggressive on the short side. 1, 2, why 2? Because now I know where your stops are. If you're caught long, you get stopped out, you're selling your way out of that trade. And remember, as we go lower, it's almost always going to be the add-on, right? The add-on to the winner here will almost always be a bull trap as we go lower. Again, we're going to take some off at the low of day there, but if we're smart, we'll hold on to the runner, right? right? Mark above, mark below, right? And again, that runner will be down there for our final target down below here. At the same time, right? We go up, we get whacked back down. We don't get the bull trap up top. We find that new V top channel. Remember, first test is the best test. I like getting above prior swings. Any of the entry patterns you guys are learning, bull traps, buyer failures, pullback combinations. Again, once you get in the video course, you'll know what the language is I'm speaking on these. So first test, right? First test trap, first test is the best test off that. And just like on the S&P, right? If this thing rips and runs higher, who knows? Maybe CPI comes out negative tomorrow morning. I have no idea what it will be tomorrow, right? I don't think anybody does. I'm sure some folks do, but it's definitely not us, right? So again, CPI may come out negative tomorrow. The market may love it, it may rip going higher. If it rips going higher, that two-legged pullback, right? Think about measured move, trap those bears in, or that pop and grind we mentioned earlier. Okay, enough of the review of that. Let's talk about going lower here. The most important thing you want to think about if we go lower is momentum and a range breakout. Okay, momentum is going to be very strong and it'll be a range breakout. So what do range breakouts do? Range breakouts like to, yes, breakout pullback. So literally the exact same game plan. Well, not the exact same game plan. Let's talk about why I say that. So if we had a roll lower here, if we go lower, the market will want to retest or breakout pullback, take out that low, and now that might finally be low enough. Because again, we're overall bullish on the hourly, but we've made this huge run up ever since, Thanksgiving, right? So it makes sense we got to pull back uncomfortably long, right? To pull back here to find more buyers down here. That may be our bottom at that point after CPI tomorrow morning. Now, I think if we play our cards right, I can buy it, I can sell it, and I can buy it. Right? Traps are everywhere. I warned you about this, right? Traps are everywhere. So as we go lower, my problem now is momentum, right? It's very difficult to pick a bottom when the market's moving like that, right? Again, it'll be after CPI report. It's gonna be very strong. So in this scenario, what I want is what I call a crown reversal pattern. It's basically a bear trap pattern, but it kind of looks like a crown. You'll see why, right? So at this point, is this a good place to sell? Of course not, right? We don't want to sell way down, right? But at the same time, I don't know how far it will go. I don't know, right? I think I do, right? It may, obviously, we'll use the pendulum swing. I'll use the amount above, the amount below, but a lot of times this keeps going for a little while, right? So again, as I roll lower, my goal now will be to trap the bears in. Think about a technical bear trap, right? So bears once, higher high, bears twice. Now remember, that strength going lower is going to want to pop up and retest that low because of what? Because of all of that strength, right? Momentum is really important when we're going lower like this. So I don't want to buy it as it's going higher. I want to buy basically as low as I possibly can. And to do that, I'm always looking for this entry pattern. It's basically a bear trap, but it's a crown reversal pattern, right? It's bears once, it's bears twice. It's a strong green candle. That strong green candle needs to close firmly, or as I said in the video course, convincingly above that moving average. Notice that pattern, 2 tries, trap right below that low, strong convincing candle above that 21 EMA. I'll take my 1-to-1 first target, stop moves up to point of entry. Now who knows, right? This may keep on rolling. It may keep rolling for a good distance up there. That might happen tomorrow. But what is a little more likely though is now the underbelly of that range now comes in. And we now take this now and flip it back into that 1, 2, trap the bulls in, right? Sell into their stops for that retest. Now, again, this is where I think one of the probably the easiest way to make money tomorrow will be buying off that low. Now, I need to get a crown reversal, a bear trap pattern on the initial move lower because I don't have a bottom to work with yet. I don't know how far that move down will go. But once I go back and retest that low, now we know more. Now we know that anybody who sold that, what is basically a 2-try failure pattern, right? Like I teach in the free video course, 1 try, 2 try, because again, it may keep on going, right? I'm not going to blindly sell that breakout pullback. So 2-try failure, 1-to-1 first target. Again, more information on that in the free video series mentioned earlier. Profit target comes off at that low. Now, anyone who sold up here, if they're smart, they're taking a big chunk of their profit off where? At that low. Sellers up here become buyers down here. Not a great spot to be selling, which is a great spot for a bear trap. 1 try for the bears, 2 try for the bears. Why 2? Squeeze those stops. Now, where's the market want to go? It wants to go back up and take out that high right there. So as we see these bears now getting trapped in, as long as I can risk small to earn large, right? With that calculation, this failure pattern makes a lot of sense. Squeeze those bears back up. Profit comes off here at that high. Do we wind up 1, 2 back down again? Make one big range down here? Or do we wind up maybe possibly, right? Running, grinding, going higher and finding that new bull channel and grabbing that first test is the best test. I'm obviously running a space here on this chart right now. So as we go lower, if we get that rotation off of that low, it's that bear trap, crown reversal. It's that breakout pullback. I mentioned earlier, of course, on the S&P as well. And that double bottom retest. I'll tell you, long-term bull market, double bottoms are always exciting ways to trap in bears. Another bite at the apple and that run going higher here. Now, one more variation of this, all right? One more variation. I have seen many times before where we'll go up, we'll get a bull trap off the high, we'll get that strong run down, we'll know where that pendulum swing is going lower, final profit targets get hit. Now I begin to look for that bear trap. 1, 2, bear trap back up. What happens is we're so bullish overall, we don't get that bear trap. The market goes up, right? The market basically rips and goes whoop and goes right back up into that range overhead. Where's the market want to go? It wants to rotate back and forth, right? Like a pendulum. So if it V bottoms off that low and begins to grind going higher, you should know this by now. Hopefully you know this by now, right? You find that trailing off the highs, you mark off that low. We know now that grinding movement, that grinding motion anchors this market higher now. Now it's just a matter of not chasing after it, looking left, finding prior swings that line up around that first test is the best test. And most importantly, having the guts to pull the trigger with that strong green candle closing above the 21 EMA or that seller failure pattern like I teach in the free video course. And again, leave that runner, right? Leave that runner because it'll want to pendulum back in the opposite direction. All right, folks, that is the game plan for tomorrow. A lot of traps on our radar. I've covered a lot of details in tonight's video, but remember, tomorrow morning, the place to be is with us in our trade room, 8 o'clock Eastern time. I can't think of a better way to learn to trade. Come out and do it with us every morning, 8 a.m. Eastern time. I'm going to put all the important links you'll need down below the video in the description. Start first with that free video course. Enjoy all those trade examples. Everyone loves all the trade examples in there. Then come join me in my trade room and we'll trade it together every morning at the opening bell. In the meantime, be well out there. Be nice to each other, will you? Make some money for me tomorrow morning on CPI. And whatever you do, be here next time. Adios, amigos. Bye for now.